Good morning, everyone. Welcome to the official YouTube channel of Office Surrey 24/7 and welcome to the session 50 days, 50 classes. As you know, your JIB exam is on October 2020, is in October 2023, and the first paper will be at 8th of October. The second paper will be on 14th of October. And the second paper of yours is PP. Every day we are discussing in the 50 days, 50 classes about the particular chapter of your PP. So as we know, those candidates who are new in this particular session, I will let you know what we are actually doing in the 50 days, 50 classes. We are having each topic in one day session. On the particular topic, we are discussing MCQ with the explanation, so that you will be able to revise the content, or if you haven't completed the chapter yet, studying the chapter yet, then you will have the idea what actually the chapter covers. So this will be available in these session of your, okay. So as we know, there are 55 units in your PPB syllabus. There are 4 modules. Every subject of your JIB have 4 modules. In which PPB also have the 4 module. In the PPB, there are total 55 units. Out of 55 units, 21 units are in the module A. And today we are going to discuss about the 18th unit, that's the duty and rights of a banker and a customer. So if you remember, we have discussed banker-customer relationship, in which agent, principal, trustee relationship, beller-belly relationship, creditor, debtor, debtor-creditor, these kind, lessor, lessee, these kind of relationship we have discussed. Then we have a banker-customer, banker-special relationship, in which we have discussed line, we have discussed right of setup, we have discussed right of appropriation, we have discussed power of attorney. These are the special. When it comes to the duties, the bank have a certain duty to be performed for the customer. The duties and right of a banker and the customer also have a certain liability towards its bank. It's not like that always it's a liability of a bank towards the customer. Customer also have a liability towards the bank, है ना? So all that duties, all that rights of the banker and the customer rights we are going to cover in this particular unit. Clear? So let's start. The first question is talking about here, which of the following is not a key commitment under the BCBI Code of Banks Commitment to Customer? Right, we are talking about which of the following is not a key commitment under the BCBI Code of Banks Commitment. So we have certain points here. Out of that, which of the following is not a key commitment that you have to tell? To help customer use their account or service, to sanction loan facility as per customer request, to deal quickly and sympathetically with things that go wrong, to publicize the code. So what do you think, which of the following is not a key commitment under the BCBI Code of Banks Commitment to Customer? So to help customer use their account or service, this is the what we can say, this is the commitment that bank have towards the customer. They have to help customer to use their account and the services they are taking from the bank. Third is to deal quickly and sympathetically with the things that go wrong. Obviously, if something went wrong, if customer has faced a certain loss or problem, you have to help out the customer. Publicize the code, this is true, but to sanction loan facility as per customers request, this is not a commitment of a bank. The bank will sanction the loan as per the criteria of the bank, as after checking the KYC, after checking the credit history, after checking the collateral, everything. Then bank will decide what amount of loan will be sanctioned. The right answer will be B option. Okay, right answer is B. Now next question is talking about which of the following are the part of basic duties of a bank towards customer? So which of the following are the part of basic of a bank towards the customer? So bank have a certain duties, certain responsibilities toward the customer. Out of these 4, which of the following is the duty of a bank? So first we have duty of secrecy and confidentiality. Second, duty of reasonable care. Third, dealing with garnish or attachment order. Fourth, all of the above. So out of these particular duties, which of the following duty is the basic duty of a bank towards the customer? So bank have a duty of secrecy and confidentiality, is it? Yes, it's true. Now it has been said to the bank, you can't share the information of the customer with the third party until and unless customer allows you to do so, or until and unless law says so. Let's say, for example, a certain case came up against your customer and the government or the police department or the CBI or something, income tax officers, they are asking for a detail about the customer. In that situation, you have to share the information of the customer. So after certain exceptional cases are there, in case of your legality formalities, you have to share the information about the customer, otherwise no. So this is actually the duty of a bank of secrecy and confidentiality about the customer information. Okay, now duty of reasonable care. Obviously, this is also a duty of a bank to have a reasonable care in context to the customer. Dealing with the garnish order or attachment order, this is also a duty of a bank. Having or following the garnish order, attachment order, this is the duty of a bank. Garnish order will be given by the court. Attachment order will be given by the authority, like income tax officer, revenue officer, etc. But both have to be dealt by the bank as per the order have been received. Okay, so all are the basic duties of a bank towards the customer that bank have to follow or bank have to complete this responsibility. So right answer is D, all of the above. Now, next question we have, the loan account of Mr. X are overdrawn. Which of the following steps is not appropriate to be? So Mr. X has an account in a bank, or that account have been overdrawn. Like as per the limit, you have overdrawn the amount of money from the Mr. X account. So what can be, which of the following cannot be the appropriate step? First, the bank's lawyer issues a legal notice containing various details of the loan account. Second, the bank discusses the matter with the guarantor with complete details of the loan account. Third, the bank informs the status of the account to CIBIL. Fourth, the bank contacts a firm that provide informally recovery services and the service and gives the details to them. So out of these four situations, which of the following is not a right step to be taken? Which of the following is correct? So it is not appropriate step. First, the bank's lawyer issue a legal notice containing various details of a loan account. This is a appropriate step. Now, after seeing the overdrawn limit, you have to issue a legal notice. This is true. The bank discusses the matter with the guarantor with complete details of the loan account. This is also true. After facing the overdrawn condition, you have to talk about with the guarantor about that. The bank informs the status of the account to CIBIL. This is also true. CIBIL is what? Credit Information Bureau of India Limited, that gives the rating to the customer on the basis of their credit card repayment and loan repayment condition. So CIBIL provide 3-digit rating to the customer, and it has a highest, or not highest, but the biggest customer base, because it provides rating to individual customer like me, like you, like any other person. It provides rating to these individual person. That's why it has a biggest customer base. Now it also started providing commercial rating. It also provide rating to the corporates. Okay, earlier it used to provide rating to the individual persons only, but now it is also providing rating to the commercial. Okay, so bank informed the status of the account to the CIBIL, obviously, so that if the customer went to another bank and asking for a loan, so CIBIL will be there to inform the bank that this customer has default, have done default or certain thing with the another bank, so that the CIBIL, the another bank will not approve the loan of a customer. This is also a right step. So the bank contacts a firm that provide informally recovery service and gives the details to them. This cannot be done. This is not a professional way to overcome this issue of overdrawn amount in the loan account. Okay, so the right answer will be D option. It is not an appropriate step that can be taken by the bank. You can't do that informally. You have to follow the formal rules. You have to follow the rules, regulation, guidelines, and a standard norm. Okay, next question. Now, bank customer relationship is what? It's a contractual relationship. Obviously, bank customer relationship is a contractual relationship between two parties, and it may be terminated by which of the following ways. So every time bank and customer is having a relation, that's a contractual relationship between bank and customer. Contractual relationship simply means bank and customer have become the partner of each other in performing a certain service, in performing a certain service or product, financial product and services, and they are helping each other in their requirements. So they have been created a contract among them, and accordingly they are working together. If you want to terminate, the termination of the contractual relationship between a bank and a customer can be done in which condition? In which ways it can be done? So first we have voluntary termination, death of customer, insanity of the customer, garnish order, bankruptcy of a customer, liquidation of a company. So in which of the condition the termination will be done of contractual relationship between a bank and a customer? Only 2, 4 and 5, only 1, all except 3 and 4, all. Let me know which of the following is correct. A, B, C or D. So when it comes to the termination condition, so the first one is definitely right. The voluntary termination is allowed. Like when customer giving a certain written request to the bank that I want to close my account, I want to close the relation, then it will be done. So on the basis of voluntary termination, it is allowed. Okay. Now, apart from that, the second way is termination of this contractual relationship between a banker and customer. The termination will be done by law. By law. The termination will be done by law. Okay, and termination, if done by law, it will be done in case of death of customer, in case of insanity of the customer, in case of garnish order, in case of bankruptcy of a customer, and liquidation of a company. All these will be the part of termination of by law. So there are two ways only. The first one is voluntary termination and the second one is termination by law. Okay, and the termination of law will cover all these activities. So the right answer will be here D. All are the ways by which the termination of the contractual relationship between the bank and a customer can be done. The right answer is D. Next. Next question we are talking about. In case of customer grievance redressal, every member is required to have dash. So customer grievance redressal portal should be there in each and every services you are providing, not only in banking services, also in the another services. So first, in case of customer grievance redressal policy, every member required to have what? To have a help desk helpline at the branch, to have a code compliance officer at each controlling office above the level of the branch, to have display at each branch name and contact number of the code compliance officer, and to have display name and address of the ombudsman. So which of the following is correct? A, B, C or D? Which of the following is correct? So it's obviously every member have to have a help desk and helpline number at the branch. Every member have to have a code compliance officer at each controlling office that is above the branch level. Every member have to display each branch the name and contact number of the code compliance officer. every member have to have display name and address of the ombudsman in their branch. The right answer is all. All of these have to be there with the members when they are providing grievance redressal to the customer. Okay, so right answer is D. Now, before moving towards next question, I want to tell you something. A very biggest surprise for your JIB October paper. Now, what is it? I was thinking that I will reveal that surprise only on the day when we are going to have this particular thing. But now, as you know, if you are having a certain secret, na, you have to make it out. Hai na? So I'm not revealing everything here right now, but it's a very, we can say it's a very helpful thing that we are going to have on 9th of September, only on Officers are 24/7. That is definitely going to help you out for your JIB. As you can see, Officers are 24/7 team is coming up with a big surprise for the JIB aspirants. Okay, a very big surprise for the JIB aspirants we are introducing. And to know what is this big surprise, you have to there on 9th of September, the second Saturday at 8 p.m. only on Officers Adda 24/7 YouTube. Okay, so to know this surprise, you have to be there on second Saturday on 9th of September in the evening at 8 p.m. So do make sure the link of this session will be available in the comment. So click on the comment section and do check the link there and click on the notify me button so that you will not be missing this particular event on Saturday. Okay, so that's a very big surprise, and that surprise is definitely going to help you out for your JIB October preparation because we are working accordingly for you, all of you. Okay, so let's start. Next question. Which of the following is our important obligation of a customer towards his/her bank? Now, the obligation of customer we are talking about towards the bank. And the options we have: to keep the passbook, the checkbook, and the debit card safely, not to allow any third party to use your own bank account for its transaction, to provide the required document and information, including personal information for KYC. And the next one is not to click on any link you receive through emails, SMS, etc. for accessing bank's website. Even if you are going on Google also, na, on Google there is a fake links of the bank's website. Hana? So always do check you are using a secure website of a bank. This is very important. So all these are the points in front of you. So which of the following are the obligation of a customer towards the bank? Okay, so which of the following is correct? Actually, everything is correct. All are the correct statements regarding the customer's obligation towards the bank. Hana? It's not like every time there is a mistake from the side of bank. If you got a link by like a UPI link, a lot of people have got, like you have won the reward of 5,000, click on this particular link to get the reward. And people used to click on that. And as you click on that particular link, your UPI account will be empty. So this is the responsibility of the customer to follow these points. Okay, these are the obligation of the customer toward the bank. Now, in which of the following situation is the bank authorized to share information? In which situation bank is authorized to share the information? First, Mrs. B, wife of Mr. A, comes and asks the balance in his savings account in a single name. Anna, so the account is on the name of Mr. A, but his wife came to the bank and asking for amount. Second, the balance in a savings bank account is blocked as per the attachment order of the income tax officer under advice of the customer income tax department. Then Mr. T, the teller, speaks out the balance in the account of Mr. X, who has just withdrawn cash from his account. Then the balance in the savings account of Mr. Y is told to an income tax officer making telephone inquiry. So what do you think? Which of the following situation is the bank authorized to share information about the customer? A, B, C, or D? Which of the following is correct? So, in case of wife ask about the balance in the husband's account, it is not allowed. In case of Mr. T, the teller speaks out the balance in the account of Mr. X, not allowed. The balance in the savings account of Mr. Y is told to an income tax officer making telephonic inquiry. Can't do that. The only permission is given to the bank to share the information of the customer and not somehow violating the rule of secrecy and confidentiality, in which the balance in the savings account of a customer is blocked as per the attachment order you have received from the income tax officer under the advice to the customer and the income tax department. The right answer is your B. Okay. Which of the following are true about BCSBI present state? So, BCSBI is Banking Codes Standard Board of India. So, if we talk about BCSBI, is it working right now? Let me know. BCSBI is working right now or not? So, it is simply the Banking Codes and Standard Board of India. And it is what? It is Banking Codes and Standard Board of India. Is it working right now in the country? Okay. So, you can see here, these are the statements. Out of these, you have to tell which of the following is true. The first one is asking that in February 2019, RBI opined that the function of BCSBI are being handled departmentally and advised the BCSBI to take a step for dissolution. Like it have to be removed from the country. The second we have here, BCSBI has discontinued operation related to the objects of the trust effective from 1st April 2009. Like BCSBI has removed its operation, discontinued its operation from when? From 1st of April 2009. Third, RBI since set up Consumer Education and Protection Department issued the Charter of Customer Rights and considerably strengthened the ombudsman mechanism to enhance the customer protection. So, it was accordingly decided to dissolve the BCSBI. Like if you are resolving the BCSBI, who is going to take care of the frauds or all of the complaints of the customer? So, for that you have to make the ombudsman strong, and that's what RBI did by merging three ombudsman scheme: banking ombudsman scheme for NBFC, and ombudsman scheme for digital transaction. All these three have been merged and single scheme has been introduced that is named as integrated ombudsman scheme. By Reserve Bank of India in 2021. And so we have made the strengthen to the ombudsman mechanism. So which of the following is true? All are true. We have dissolved the BCSBI. In place of BCI, now ombudsman have to take care of everything. And it was dissolved, discontinued from the 1st April 2009. Right answer is D. Right answer is what? D. Next question. It is talking about Mr. Z has availed a clean overdraft from a bank. He has certain fixed deposit with the bank. He also has a safe deposit locker with the banks. Which of the following is the correct position? Which of the following is the correct position? So, first option we have, the bank has general line on only on the fixed deposit. The bank has no line either on the fixed deposit or the content of the safe deposit locker. The bank has general line over both the fixed deposit and also the safe deposit locker content. Then the bank has general line only on the contents of the locker. So, what do you think? Which of the following is correct? A, B, C, or D? So, a line is simply, banker's line is simply when the bank has a right on the collateral until and unless customer repay the loan to the bank. Okay. Now, let me know which of the following is correct. So first of all, the bank has no line either on fixed deposit or the contents of the safe deposit locker. No. The bank has general line over both the fixed and also the deposit locker content. Not possible. The bank has general line only on the content of the locker. No. The bank has general line only on the fixed deposit. The general line. There are two types of line, na? General line and specific line. So the general line has only on the fixed deposit. Okay, so right answer is A. Okay, right answer is what? It is A. Now, the obligation of banks to keep the affairs of their customer secret and confidential arise from dash. So when we talk about banking structure simply talks about the types of bank, the evolution of the bank and everything you have to cover. So first of all, in the 1770 year, in the year 1770, we have seen that the establishment of Bank of Hindustan was done, and this was the first bank which was established in our country in 1770, and the headquarter of the bank was in Calcutta. Now this Bank of Hindustan is the only bank, or we can say the first bank, which started the formal financial system in our country. Now what is formal financial system? We have discussed that already in the 20th unit. The system where the regulators are there, the guidelines are there, the rules and regulations are there, that system is known as formal financial system. So the formal financial system started in India from when? From 1770. Okay. After that, RBI, Reserve Bank of country, the central bank of our country, was established on 1st of April 1935. That's the first time we have established the central bank of our country in the year 1935, 1st of April. So when RBI was established, it used to be the private shareholders bank. It was what? It was the private shareholders bank. It means to establish Reserve Bank of India, to establish the central bank, we needed a particular capital, and that was not available with the government. The 5 crore initial capital was not available with the government, so that have been taken from the public as a shareholding, and that's why RBI used to be the private shareholder bank. But now the ownership of RBI has been changed. Now RBI is the government's bank, and in the year 1949, 1st of January, the nationalization of RBI was done. The nationalization of RBI was done. Or since then, RBI is the Government of India's bank, because Government of India have purchased 100% shares of your Reserve Bank of the country. Clear? Apart from that, if I talk about the nationalization of commercial bank, the first nationalization of commercial bank happened in 1969. Okay, in which year? In 1969, the first nationalization of commercial bank have been seen, and there was 14 commercial banks that were nationalized in the year 1969. How many commercial banks were there? 14 commercial banks were nationalized. Now, why only 14? The first Bank of India was Bank of Hindustan, which was established in the year 1770. Since then, till 1969, we only had 14 banks. No, we had unlimited banks at that time also. But why only 14 banks? Because the government have given the criteria here. Only those banks will be nationalized who have what? 50 crore public deposit. Hana? Who have 50 crore public deposit, those banks will be known as your commercial banks. Hana? Only those 14 banks were nationalized in the year 1969. Then in 1980, the second nationalization happened, and in the second nationalization, 6 more commercial banks were nationalized. Now, why only 6 more commercial banks? Because the criteria government have given, that is 200 crore public deposit. So 200 crore public deposit was the criteria that have been seen here in the 1980. Okay, so those type of bank in India was only 6. That's why the 20 banks has been nationalized till now. That is 14 in 1969 and 6 in the 1980. But if I talk about right now, we have only 11 nationalized bank. We have not more than that nationalized bank, because the other nationalized bank have been merged with the another banks. Okay, that's what we're talking about in the nationalized bank. And if I talk about the banks in India, so first of all, we have the central bank of our country, and the central bank of our country is RBI. Who is the central bank? The central bank of country is Reserve Bank of India. And RBI has divided the banks in India into 2 categories. That is for scheduled bank. Those banks who are listed in the second schedule of RBI Act 1934, these banks are scheduled bank. And the second category is non-scheduled bank. Okay. Now the scheduled bank is further divided into three categories, that is commercial banks, non-commercial banks, and cooperative banks. So these three categories has been seen. Now the commercial banks further divided into three categories, that we have public sector bank, private sector bank, and the foreign bank. Okay. Now the public sector further divided into two categories. First is State Bank of India, and the second one is nationalized banks. Okay. Now the cooperative banks are also divided into three categories, and the three categories are primary credit society. The three categories are primary credit society, district central cooperative bank, and state cooperative bank. So these are the three cooperative bank: primary credit society, district central cooperative bank, and the state cooperative bank. Now the local area banks are the only scheduled commercial bank, non-scheduled banks in the country. Only the local area banks are the non-scheduled banks in our country. LAB means local area banks. Apart from these banks, we have another category of banks also, that is regional rural banks, RRBs. We have small finance banks. We have payment banks. These are also the type of commercial bank, but they have been established for a specific purpose. That's why we define them individually, because these are public-private foreign banks on the basis of the ownership. These are the types of commercial bank, and these are on the basis of the purpose they have been established. Like RRBs was established to uplift the rural economy. Now the small finance bank was established for what purpose? Simply to do the financial inclusion. Same reason was there for the payment banks also. Okay. So this is the all types of banks which are present in India. This is the banking structure of our country. Okay. Now I hope everything, or I can maximum thing I have covered here in form of the theory, a kind of introduction of the chapter. Now let's move forward and talk about the questions, and we will discuss the rest of the chapter in form of MCQ. Okay. So first question is, the NABFID was set up as a corporate body with an authorized share capital of dash. So if I talk about the NABFID, NABFID is a development financial institution. What is a NABFID? NABFID is a development financial institution. We have NABARD, we have SIDBI, we have NHB, we have EXIM, we have IFCI, and then NABFID. So these are the development financial institution, and they work for a particular, they work for what? They work for a particular sector only. Like you can see, NABARD work for agriculture rural development, SIDBI works for small industries, NHB work for housing sector, EXIM work for export and import, then IFCI works for industries, big industries, and NABFID works for infrastructure development. So development financial institutions are those institutions which develop the particular sector of the country. Now the first development financial institution was IFCI, and the latest development financial institution is your NABFID. So NABFID was established in the year 2021. So what was the authorized share capital that has been seen when we have established the NABFID? And also the same question I have put here was the question in the May 2023 paper also. So which of the following will be right option? 1 lakh crore, 5 lakh crore, 1.5 or 1.85. So right answer is 1 lakh crore. The 1 lakh crore was the authorized share capital of NABFID. It was established in the year 2021. Okay. Do remember that this is a very important part. Google Pay is a dash. So which of the following is a Google Pay? So Google Pay used to be a what we can call it it was a tech company, that has been started providing the financial services by providing payment platforms to the customers. So it's a TechFin company, that is the Google Pay. That's a type of a TechFin company, that is Google Pay, a very famous application or very famous payment platform we use. Now, in terms of which section of Banking Regulation Act is the business of banking defined? In which section the banking or business defined? And the sections we have in front of you, 5, 8, 10 or 6. And the Banking Regulation Act was introduced in the year 1949. Now, what is actually the business of banking? Do you let me know which of the following option is correct, and I will let you know what is the business of banking. Business of banking is accepting deposit from public. Accepting deposit from public for the purpose of lending or investment. For the purpose of lending and investment, you are accepting deposit from the public. Then the last one we have what? The last one we have, it will be repayable. It will be repayable on the demand. That is known as your business of banking. So first is accepting deposit from public for the purpose of lending or investment, and that will be repayable on the demand of the customer. Now, these are the business of banking. But apart from that, various forms of business is provided by banks. Right? Banks are not only providing these services, they are providing more than these services also. So the various forms of business that the bank performs is defined under the Section 6 of the same Act, Banking Regulation Act. So apart from this business of banking, what other forms of business bank perform? Like providing demat account, insurance policy, mutual fund, etc. So these are the various types of business that banks provide, and this is defined under the Section 6. Now this definition of business of banking is defined under Section 5B of Banking Regulation Act 1949. Okay, so right answer will be A option. The Section 5B talks about the business of banking. Clear? So right answer is A. Okay, it is written B here. It's not B. The right answer is actually A. Okay, right answer is A, not B. In Section 5B, it is defined. Next. What is the maximum balance that a payment bank can maintain in each account? So payment bank is what I will let you know. You let me know with what is the maximum deposit that can payment bank accept from the individual customer. So payment bank was introduced by RBI as a differentiated bank in the year 2014. In the year 2014, RBI said it is introducing a differentiated bank, and that differentiated bank got licensed in 2015. That was payment bank and a small finance bank, right? Now payment bank and a small finance bank was introduced for the financial inclusion purpose. Out of these two, payment bank was introduced on the recommendation of the Nachiket More Committee. They can accept deposit from the public, but they cannot provide loan to the customer. So if we talk about here, the maximum balance that a payment bank can maintain in each account, when the bank was introduced in 2015, it was rupees 1 lakh. But now it is what? It is rupees 2 lakhs. It's what? It is rupees 2 lakh that we will see in the payment bank accepted by the bank from per customer. Okay, 1 second. This is B. This is B. Okay, 2 lakh per customer can be accepted by payment bank now. Earlier it used to be 1 lakh, but now it is 2 lakhs. The right answer will be B option. Next question, which of the following are the feature of payment bank? So which of the following are the features of payment bank, you have to tell, and you have these 4 features, out of which you have to decide which of the following is the feature of a payment bank. So first we have, they are differentiated banks and not universal bank. Okay, this is, I have just told you that payment banks are differentiated bank, that I have told you. So this is correct. But what about universal bank? They are not universal bank. Yeah? Actually, universal banks are those banks which provide all the services under a roof. When you go to the bank, deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, mutual fund, insurance, credit card, debit card, international credit card, debit card, everything is available in under a single roof. That is the universal banking. But the payment bank cannot work as a universal banking because payment bank cannot accept deposit from, payment bank cannot give loan to the public. So that's why they are not universal bank. So this is also true. The first statement is a feature. Okay, second, these operate on a smaller scale. It's very obvious. The payment banks are the example of narrow banking. Narrow banking means when the bank places its fund only in risk-free assets. That's what the payment bank can also do. So this is also true. It needs to have minimum paid up capital of 100 crore. This is also true. To start a payment bank, you need a 100 crore initial paid up capital. The minimum initial contribution of the promoter of the payment bank to the paid up equity capital is required to be at least 40% for the first 5 years from you have commenced your business. So this is also true. The promoter contribution in the initial 5 years will be 40% only. It means all are the features. It means all are the features of the payment bank. Okay, all are correct. Right answer will be D option. So right answer is what? D option. Clear? Next we have here, which of the following are not product of NPCI? Which of the following are not the products of NPCI? Now what is NPCI? I will let you know. NPCI is National Payment Corporation of India. That's a umbrella organization for our country because it maintains all the retail payment system in our country. It maintains all the retail payment system in our country. That's the NPCI. So NPCI is an umbrella organization. And RBI have thought and RBI have said that like NPCI first of all established in 2008 by RBI Indian Banks Association. And before some time RBI said that NPCI have the monopoly in the market because all the retail payments are managed by NPCI. So it kind of actually have a what? It kind of actually have a monopoly in the market. And to remove that monopoly and to stop that monopoly from the market, RBI has introduced the new umbrella entity. They have not been established yet, but the licensing or the application, I can say the application RBI started getting from the new umbrella entity. So these new umbrella entity will be the competition of the NPCI so that NPCI will not create the monopoly in the country. That's the RBI's idea. Now, which of the following is not a product of NPCI? RuPay is a product, IMPS is a product, NACH is a product, NFS is a product, but not NEFT, RTGS. They are managed by RBI and they both have become 24/7 also. So all are the product of NPCI except fifth. So this is not a product of NPCI, all the others are. So right answer will be D option. Okay, next. In terms of which section of Banking Regulation Act is the business of banking defined? So this we have done already. Now this is a repeated question. Really sorry. Now a transaction carried out at an ATM of the card issuing bank is called an dash transaction. See, there are two types of transaction. First is on us. Second is off us. On us transaction means let's say you have a account in SBI. And you have a ATM of SBI. So when you have account of SBI and you are using the ATM of SBI only enough to withdraw the money, that is known as on us transaction. That's an on us transaction. But if you have an account of SBI but you are using Punjab National Bank's ATM to withdraw the money, that is known as off us transaction. So on us and off us transaction are there. On us means you are taking the money, withdrawing the money from the same bank accounts, from the same bank's ATM, and in the office you are taking withdrawal from the different bank's ATM. So which of the following will be correct? The transaction carried out at an ATM of the card issuing bank only. The card issued by SBI and you are using the SBI ATM. That's what? That's an on us transaction. Okay, so right answer is A. Right answer is what? A. Next question. Match the following. So we have institute here, we have the establishment of the institute, and we have to match them. So first let's see, out of these 5, which bank establishment you know? So I know the establishment of Imperial Bank of India. Imperial Bank of India was established in the year 1921, that is 5th. Because after the merger of all the Presidency Bank, we have created Imperial Bank of India. So I remember the year. Now, do I know the Punjab National Bank? Yes, I do. Punjab National Bank was established in 1894. Okay, it stayed in the Pakistan also after the independence for 1 year. Next, the first Presidency Bank, I even know this. The first Presidency Bank was the Bank of Calcutta, but its name was changed in the 1809. That was Bank of Bengal. So it was actually established in 1806, Bank of Calcutta. So this is third. Now, I do not know the establishment of Indian Bank. I really do not know the establishment of Indian Bank, but I know the establishment of Bank of Madras. It was established in 1843. That's the fourth. So the one more Presidency Bank was there. The first Presidency was Bank of Bengal. The second was Bank of Bombay. It was established in 1840. And the third was Bank of Madras, established in 1843. It means then the Indian Bank was the 1907. So I really didn't know the establishment of Indian Bank. Now do remember, Indian Bank was established in 1907. So the first is E, the second is D, the third is C, the fourth is B, and the fifth one is A. So first is E. No. First is E, this is true. Second is D, this is true. Third is C, this is true. Fourth is B, this is true. And fifth is A, this is also true. It means the right answer will be D option. The right answer is D option. So do make sure in the match the following, find out the option which you actually know. And what are the remaining, that will automatically be fit in the answer. So right answer is D option about the match the following. Okay, now. Next is, what is the minimum capital requirement for setting up of a small finance bank? If you want to set up a small finance bank, what initial capital you required? So I have told you 100 crore is required for the payment banks, right? Now if I talk about 500 crore, this is required for what? This is required for commercial banks or universal bank. Okay, and this 200 crore is required for a small finance bank. So when the small finance bank was introduced now with the payment bank, it used to have the initial capital 100 crore like the payment bank have right now. But its initial capital has been increased by RBI. Now it is 200 crore. So payment bank 100 crore, small finance bank 200 crore, commercial bank or universal bank 500 crore. So do remember all these three. Okay, so right answer will be your B option. So first question is talking about Section 131 of Negotiable Instrument Act extends the protection to the dash. So it extends the protection to whom? It extends the protection to collecting bank, to paying bank, to drawing bank, or to a negotiating bank. So as I have talked about, it talks about a lot of conditions about the check, like who is liable, who is not. All these conditions will be there in the Negotiable Instrument Act. So this is what we're talking about. Section 131 gives the protection to which of the following bank? Collecting bank, paying bank, drawing bank, or a negotiating bank. The right answer will be your collecting bank. It gives the protection against a certain situation to the collecting bank under the Negotiable Instrument Act 1881, Section 131. Okay, so right answer is what? Collecting bank will get the protection against the case. Now, second question is talking about here, where a customer, Section 131 gives the, we have talked that Section 131 gives you the protection to whom? To your collecting banker. But in what condition it is providing the collecting banker your protection? So this is the question that is related to the first question. That question is asking Section 131 of Negotiable Instrument Act gives protection for collection of a dash. It gives protection to collecting bank, that we have seen. It gives protection to the collecting bank, but it gives protection for collection of which of the following instrument? That's the question is asking. And the first option you have bill of exchange, promissory note, negotiable instrument, and check. So it provides the protection for which of the following document? So do remember, it gives protection to whom? Collecting banker. In which case? In case of your check. So Section 131 talks about the protection given to the collecting bank. for the collection of check. Okay, both the questions are linked to each other, so do remember them. Now, let's move forward to the second question that is talking about here. Where a customer by a letter has advised the bank directing the banker not to honor pay a particular check, such letter is called dash. Letter of credit, stop payment letter, mandate or garnished letter. Which of the following is correct? A, B, C or D? So in which condition, when a customer by a letter has advised the bank and directing the bank that not to honor or pay a particular check, such letter is called letter of credit, stop payment letter or your garnish order or mandate? So right answer is stop payment letter. Okay, so right answer will be stop payment letter. Next, third question. The bill of exchange and check is defined under dash section of Negotiable Instrument Act 1881 respectively. So which of the following is the section of bill of exchange and check under the Negotiable Instrument Act 1881? I have told you that there are three negotiable instruments defined under section 13 of Negotiable Instrument Act: promissory note, bill of exchange and check. Out of that, we are asking bill of exchange and check is defined under which section? Section 5 and section 6. So right answer will be your C option. So section 5 defines the bill of exchange and section 6 defines the check. So right answer will be your C option. Now, the next question is talking about promissory note is defined under dash section of Negotiable Instrument Act. So, which particular section talks about the promissory note? Section 5 talks about bill of exchange. Section 6 talks about check. And section 4 talks about the promissory note. It talks about what? It talks about the promissory note. So check, you all know, check is simply a type of a bill of exchange which is drawn on the name of a specified person or otherwise on the demand, right? Now, promissory note and bill of exchange are kind of a similar document. They both are documents in writing. They both will have they both will be promising to pay a certain sum of money to a certain person. But there is a difference. Difference is that in the promissory note, two parties will be involved. In bill of exchange, two or more than two will be included. The next difference is that in the promissory note, there is an unconditional undertaking. Unconditional undertaking. And in case of bill of exchange, there is unconditional. Okay, it will be unconditional order. Now, what is the difference between these? The promissory note is a negotiable instrument. It's a document in writing not containing an currency note. It gives or it promises to pay a certain sum of money to a certain person or on the order of the bearer. But one thing is very important, that is unconditional undertaking. The promissory note is a document in writing which contains an unconditional undertaking to pay a certain sum of money to a certain person or on the order of the bearer. Now, what does this unconditional undertaking means? It means no matter what, if you have promised you are going to make payment on 13th of August, you have to make it possible. You can't add any such kind of condition that I will be making your payment, I will be transferring you money, I will be giving you your payment on 30th of August if and only if my money will be approved by the bank, my loan will be approved by the bank, or my further trade payment has been received to me. Then only I will be paying you money on the 30th of August. No such kind of condition you can add. You can't say that I will be paying you money on 30th of August if on that particular date it was raining. So no such kind of conditions are allowed to make in the promissory note. If you have promised you are going to pay on the 30th of August, that you are taking undertaking that I am responsible, no matter what, I will be paying your money on the 30th of August. This is the unconditional undertaking. Two parties will be there. Now, what means unconditional order? It means you are ordering your bank that no matter what, on 30th of August, you have to make this payment to this particular customer. This is known as unconditional order. So, in bill of exchange, you are giving order to your financial institution, and in case of promissory note, you are taking undertaking by yourself. This is the only two differences between promissory note and bill of exchange. Okay. Now, next. So, right answer is A. Next, forged check is all an valid, invalid, dead or stale check. So question is asking forged check is all an valid, and it can't be a dead check. It can be a stale check. A stale check means when the validity of a check is expired. When the validity of a check is expired, that check is known as your stale check. And the validity of a check is 3 months. If this validity expired, then the check will be stale check. So it can't be the right, it is the invalid. So forged check is all an invalid check. Right answer will be B. Next, payment in due course is defined in which section of Negotiable Instrument Act 1881? So payment in due course is defined under which particular section? You have to answer. Section 4, 5, 10 or 31. Which particular section talks about the payment in due course? So what actually the payment in due course means? When we talk about payment in due course, it defines like making the payment apparent within the apparent tenure of the instrument. Okay, in a good faith and without negligence of to any person in possession. So thereof under circumstances which do not afford a reasonable ground for believing that it is not entitled to receive payment of amount therein mentioned. So payment in due course means simply the payment in accordance with the apparent tenure. Like I have told you, check has a validity of 3 months. So when you are making the payment of a document available on an apparent tenure, that is the payment in due course. Okay, that will be known as what? That will be known as your payment in due course. It cannot be defined under 4 or 5 because we have said promissory note and bill of exchange is there. It can be C or D only. So right answer is C. In the section 10, it talks about the payment in due course. Okay. Now next question. A check favoring Mr. Rajkumar or order is stolen. The thief endorsed the check as a Rajkumar in his favor. The check is presented in clearing and paid by the drawing bank. The true owner later on sent legal notice to the bank. What is the liability of the bank? In this case, this is a kind of case study. Hai? What will be the liability of a bank? So first is saying the paying bank will get protection under Negotiable Instrument Act. Second is saying a forgery does not give any rights to the paying bank, hence it's liable. As per section 85 of NI Act, the paying bank is liable. As per section 131 of Negotiable Instrument Act, paying bank is liable. So we are saying the check favoring Mr. Rajkumar or order is stolen. And the thief endorsed the check. Thief have done what? Endorsement. He transferred check as Rajkumar in his favor. It means he have done the forged signature of the Rajkumar. No? That's why he was able to endorse the check. So check is presented in clearing and it was paid by the drawing bank. The bank has made the payment to Mr. person who has taken the check, who was the thief. So in that situation, the bank will be liable or not? In this situation, the paying bank will get protection under the NI Act. The bank will get protection under the NI Act because it was stolen and then it was endorsed. So right answer will be A. Now, banks slip prima facie evidence of certain facts as per dash section of NI Act 81. And we have a section number 145, 146, 147, 148. So under which section we are talking about this? So banks slip prima facie evidence of certain facts as per your dash section of Negotiable Instrument Act. First of all, it means what? It means the evidence of complaint may be given on affidavit and that is subject to all just exceptions be read in evidence in case of any inquiry. So or the trial if happens, or other proceedings if happens. So the court shall on production of the bank slip or memo with the official mark that denoting that the check has been dishonored or presume the fact of dishonor of such check unless it is disproved. So that will means the bank slip prima facie evidence of certain facts and it is defined under the Section 146 of Negotiable Instrument Act 1881. So the right answer will be your B option. Next. Crossing of a check is defined in which section of Negotiable Instrument Act 1881? So crossing of check will be of three types. Okay, the crossing of check will be of three types. So the sections are there 123, 124, 125, both A and B. Which of the following is correct? If I talk about the crossing, there are three types of crossing. We have a general crossing, okay, in which you will find this is your check. On the left side top, two parallel lines will be there. Then we have account pay crossing. In the two parallel lines, left top it will be written account pay. And the third special crossing, at the left side of the top of the check, two parallel lines will be there. It will be written account pay and the name of a particular bank. These three types of crossing will be there: general crossing, account pay crossing, special crossing. Okay, so it is defined under which particular section? It is defined under both section A and B. It means 123 and 124. So section 123, 124 deals with two types of crossing, that is general crossing and special crossing. Okay, 123, 124 talks about the general crossing and the special crossing. So right answer is D, both. Next, section 131 of Negotiable Instrument Act gives protection for collection of which of the following? We have discussed this. For the check, it gives protection for the collection of check. To whom? To the collecting banker. To the collecting banker, it will provide you the protection. So this is what we have discussed about the payment and collection of check and the other Negotiable Instrument Act chapter. But that's very obvious, not sufficient, because the syllabus is very vast. So to have an in-depth study, to know the topic in very much detail, in comprehensive way, what you can do, you can join the Mahapack 2.0 that is available on the Adda 24/7 website and will be giving you a lot of benefits here. So how to enroll? Simply just go to the Adda 24/7 application. If you haven't downloaded the application, then do download the application, because there you will get 1% additional discount. Then go and click on the Adda 24/7 application, and this will be the front page in your application. Just click on the JAIIB CIB section here. Then go to the JAIIB October 2023. Do read all the details here. Mahapack 2.0 and the Sankalp JAIIB selection batch both are available on the website. And to enroll, what you have to do, just click on the particular product. Let's say you want to enroll in the Mahapack. So first of all, check the offerings of a product. These are the offerings. So offerings of a product is written, or it is defined at the home page here. So you can see here, these are the offerings. And these are the three validities available for all of you. 3 months, 1 month and 24 months. Okay. So first of all, let's check, you want to check what test series will be available. So if you are enrolling in only a JAIIB Mahapack, you will be getting only JAIIB products here. If you are enrolling in JAIIB CIB, you will getting all the CIB, JAIIB products here. So you can see topic-wise test available, like Indian economy, Indian financial system, questions, 45 mock tests are available. Each unit have one mock test that is available, and overall you will have a prime test series also. That's a full-length mock test for the JAIIB, all the 4 subjects. So after checking offering, just click on the buy now option, enter a code that is August 80, not full August, you have to write AUG 80, okay, and you will get 80% discount. If you want 1% additional discount, just go to the application, use the coins that is available on the application. So you will get 1% additional discount on this amount, okay. So this is the offer for all of you, and the code right now is AUG80. That's providing you 80% discount. If you find any kind of problem at the time of enrolling, you can click on this number and you will get all the answer of your query. Okay, you can call on this number. So this is how similarly you can enroll in the Sankalp selection batch 4th that started on the 7th of August. Okay, this is the detail. Now let me know in the comment section how many answers you have given correct. Let me know in the comment section how many answers you have given correct. Apart from that, those who are watching the recorded videos, do let me know in the comment section how many answers you have given correct. And if you are first to the channel, if you are first to watching this particular video, then go to the playlist section and find the PPB English Medium playlist. You will find all the classes this happened from the first chapter. Everything regarding PPB English Medium will be available in your particular playlist. Okay, so do check that. And do not forget to join these classes Monday to Friday at 7 a.m. for PPB and 7:30 a.m. for Indian Economy and Indian Financial System. And do not forget to download the application, as well as do not forget to subscribe the channel Officers Adda 24/7 and press the bell icon so that all the upcoming